Hello, dear traders. This is Gabriel. Welcome back to my channel, Forex.Real.Trader coaching sessions, and thank you so much for the support to my channel. Today's video, continues with module 4 about money management, as you know pretty well. And I will focus on a very important concept here that we need to understand and put into practice in every single trade. I'm talking about leverage, what it is, how it works, its implications, and how to take advantage of this very interesting but double-edged tool that we have when we trade. The very first thing here is to understand what leverage is, right? So leverage allows traders to control larger positions with a relatively small amount of capital. It is essentially borrowed capital from the broker. For this reason, it's very important to know what broker we choose to work with, right? And that amount of money is magnified, right? And magnifies both the potential of gaining and the potential of losing, right? So the very first thing here is to define some concepts. And let's go straight to the very charts. So we have these chart in here, okay? So I'm going to define these concepts that we have on our MetaTrader 5. One of them is balance. What is balance? Another is equity, another is margin, and another is margin level. So those are concepts that we have to understand pretty well. So let's talk first about this one here. Let's talk about balance. What is balance? Balance is basically the total amount of money in your account. Check this out. Before opening or placing any trades, or after all trades are closed. So that is the real money that you have in your account. Balance doesn't change while trades are open, because that is the moment in which you need to know the real money you have is when the trades are closed, right? Only that moment. Now, for example, in my account here, on this account, the real or the balance is 9,726. That is the real balance. Now, what happens with the equity? All right. So what is equity? Is your real-time account value, including open trades, profiting or losing, right? And look at this. Here's an interesting observation. You can see that in the balance, here in the balance, the numbers, right? The numbers, the figures are fixed. Let me show here. Here, the numbers don't change. They're fixed. 9,726.42. In the equity, you can see now that this number is moving. So now in this moment is 9,740.46, right? And is moving now to 9,747.45. Why? Because I have placed this trade in here. I have an open trade. Okay, so it is moving either up, right, or down. In this case, my trade is going in my favor for $4. So those are, apart from the 9,726 plus $4 is moving. If my trade were against me, okay, so the amount would be less on my equity, but my balance is always the same while the trade is open, okay? Now, let's talk about free margin. So now we have this one here. The free margin is this number in here, right? This is the number here. What is the free margin? Is the amount of money available to open new trades or handle price movements in existing trades. So my free margin is very generous. So it's around $9,356. And the free margin is also moving. Why? Because I currently have an open trade. Okay. When the trade closes, either profiting or losing, that free margin will be accordingly. If I profited with this trade, I don't know, $100. So that is going to be $9,450. But if the trade was a loser one, $100, so that is not going to be 9,340, but 9,240. So the free margin also depends on the behavior of open trades. Okay. Finally, we have another concept that is very important to understand, and is this one here. Okay. I'm talking about the free margin level, this margin level. What is that? Basically, the margin level is a percentage that shows how much of your available funds are being used for opening trades. It helps you understand and know if you are at risk of a margin call. What is a margin call? It's basically the moment your broker, okay, closes your trades because you don't have enough funds. There's not enough money to keep a trade open. So that is a margin call. When that happens, the broker will hit in here on your banner, on this banner of the trade, a red indicator, right? So when you see the red line, means that you are reaching your margin call. And if you move pretty close to there, or not beyond, pretty close, your broker is going to close that trade, because obviously the broker will not lose money, right? Remember that. Brokers never lose money. They win, the broker wins when you trade and you win. The broker wins when you trade and you lose. The broker wins if your trades last 1 second or last 1 month. Brokers never lose. For this reason, the margin level is pretty close to the margin call. So let me give you an example of margin calls in here. Say, for instance, that we are talking about key levels. So look at this here. So if my in this case here, if my in this one here, this number here, this percentage, right? This percentage here, right? 296.43%. Okay. These are the key levels for MetaTrader 5. So what key levels we are talking about? Above 100%, right? If your margin level is above 100%, right, means that you are cool, right? You're pretty safe, okay, to keep opening new trades. So your account is not at risk. What happens if your account is below? So this number here is, say, for example, 90%, not 2,638%. It means that your account is at risk, okay? So no new trades, okay? Because you are in the potential that your broker generates a margin call, right? So this is risky. But definitively, if your margin level is 50% or below, right? That is the broker's limit and is going to stop you out eventually if you reach that 50% in your trade. So if this trade is reaching this number here, like at 50%, your broker will close the trade because beyond the 50%, the broker will lose money. And remember, brokers as banks never lose money, right? So that is the important thing that I wanted to mention, right? That I wanted to mention about these concepts, right? So now let's talk about how leverage works, right? And I'm going to show you now my broker's account. For example, here, all right? So I've been trading with IC markets for around 10 years. This broker has proven to be an excellent company. The spreads are pretty cool. They support is excellent 24/7. Is so cool, and I am, I can handle my account in everything I want, right? So let's talk about how the leverage works. Look at this. For example, on my account, you can see all those leverage in there. So what it means, basically, when we talk about leverage, this is expressed in ratios, such as 10-1, 50-1, 100-1, or even higher, as you can see here on the screen, even 1,000, 1 to 1,000, right? That depends on the broker and particular regulations. For example, 100-1 leverage, for instance, here, this one. As you can see, I have my leverage on 1-50, right? But you can also set it to 1-100 if I did so, right? What it means? Basically, it means that for every dollar in my trading account, I can control $100 in the market, right? So that's it. So if I leverage my account 100-1, means that for every dollar in my account, I can control $100 in the market. The amount of margin required, okay, my capital at risk, depends on the leverage used. Okay, so if, for example, I want to do a relationship between margin and leverage. So margin is the amount of money required to open a leverage trade. For example, with 100-1 means that 1% of the total trade size is necessary to open a position. All right. Let me give you an example in here, for instance, with a 150 trade. All right. If I set this thing here, if I set this one right here, look at this. What happens in my example to 150 leverage, right? Let's suppose I have in my account right now, I have 150 leverage. So that is my leverage in here. And in my account, I have $100, right? With that leverage means that I can trade 50 times more balance, right? So what is that? It means that you are controlling $5,000 in the market, okay? Because you are now leveraged 50 times, right? So remember, with 1 to 100, you are leveraging for $1, 100. Here you are leveraging, in this case, 50 times more of your balance. If you have $5,000, right, in this case, and the operation moves in your favor with that leverage of 150, okay, you will be making, okay, in this sense, based on $5,000, not on $100. But if the trade goes against me, it's going to be exactly the same. It's going to be $5,000 base. And that would be absolutely wiped out my account. Right? What I have to bear in mind is this. I need to be very careful about the leverage that I'm going to use in my account. Okay? So how you do it? Now we can see our setup in our account. My suggestion is set up your leverage to 150, 130, 125, 120, 110, depending on the capital that you have. If you leverage your account to 1,000, you can wipe it out if you are not careful with the percentage that you use in every trade. This is something that we did in previous videos and is about how to calculate the risk that I'm going to take. Remember this website that I recommended is this one here. Okay. So at my FX book in the position size calculator, when you set the amount, the real amount, where's the real amount? Remember, the real amount is this one here, the balance. So what is the balance in your account? Say that is $9,700. All right, so that is my balance, my current balance. And in this very trade, I'm going to risk 3%. So 3%. My stop loss, okay, say for instance, my stop loss is on this very trade along is going to be, say, for example, 48 pips. All right, so I'm doing 48 pips. So I'm going to trade under these parameters, the Japanese yen. Let me see. Oh, no, this is Australian dollar, American dollar. So I check in here, Australian dollar, American dollar. All right, let's say. So let's calculate. In that order of ideas, I should trade only in my size 0.61 lots. And I would be risking, okay, $291, okay, if the trade goes against me. For this reason is because when we trade, we need to pay close attention, okay, before we proceed placing a trade. What is something in here that we must bear in mind? First, risk no more than 1, 2, or 3% of your capital per trade. Second thing, always use stop loss orders, right? Limit your potential. Remember that there is no guarantee and there is no trading plan that works 100%, okay? Always think about the margin calls. If your losses exceed available margin, your broker may close your position automatically. It's not your decision. It's the broker's decision, okay? And if we have these kind of, as a conclusion, if you have this kind of behavior, healthy behavior, we can use leverage in our favor. Remember, leverage is a double-edged sword. It can increase the potential profits, but misusing leverage can lead to rapid losses. The key to effective forex trading is using leverage with the responsibility, right? I mean, the reason because of brokers, right? The reason because brokers offer such a big amount of leverage is because basically they know that we are greedy, right? Believe me, if you do this leverage 1 2000 and you are not careful, and in a very single trade you risk more than 3%, and the trade goes against you, you can deplete your account just like this, right? In a single trade. So, suggestion, finally, set it here. Okay, that is the healthiest, and you are making money, right? Decent money with that kind of leverage, right? So, my dear traders, thank you very much for your time. And again, if you find everything that I mentioned here as interesting, if you have any questions, please feel free to ask them through the chat. So no problem in there. So thank you very much, and subscribe, like, and share. See you in the next video.